The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the start of trading. And how about the S&Ps? We are 106 points off of the overnight lows last night. Amazon trading dramatically lower. We'll get into that number. The CapEx, how about $200 billion from Amazon? Big numbers. They could go cash flow negative. Cash flow negative. They're spending so much money. Amazon, a cash king. Not when you're spending $200 billion a year. Jazzy, he thinks it's an opportunity they can't pass up. That sent the markets even lower on the escalation last night, but markets picking up some steam to the upside this morning with crypto, with metals as well. NASDAQ 100, we're up by about 0.6%. You're looking at a run of 550 points from the overnight lows last night. We are right back to where we were just after the open yesterday. NASDAQ 100 up by 0.6%. The Dow up by a similar 0.6%. We were as low as about 48,700 last night. We're up at 49,275. And how about the Russell? Up by 1.4%. And the Russell right now is almost 60 points. That's almost 2.5%, folks, from where we were last night, particularly volatile. Crypto can't get much closer to a 59,000 handle. $60,005 last night, right after the close. We're up $7,000 from that low. 67,245. You take a look at crypto, man. There's your daily. You talk about some volume yesterday, okay? 22,000 contracts on Bitcoin. You're bouncing today on 10,000 so far. Ethereum's up by $80. You were as low as 1748 last night. You were at 1948 right now. We jump over to metals. And we're getting a little bounce. But last night, things were looking a little dire with the market. Going back to a 15-minute. Gold, trades down to 46.70 last night. Yeah, 46.70 last night. The lows from February 2nd, you were as low as 44.23 on that initial thrust. I bring that up because silver. Let's get the low on silver. $63.90. $63.90. We're up by $11.20 from there. 75.11. You zoom in on the action yesterday. And we are right back to where we were 24 hours ago on silver. Protect yourself in this market, as I said, folks. Okay? $15 down, $11 up. Not behaving rationally. And boy, if you're trading this thing and you're keeping your eye on it, this is the type of volatility traders love. But don't get lulled into thinking that somehow silver's immune to going back to $50, man. Okay? We're at $75 when I look at this chart, right? It's been a heck of a run up, folks. Just protect yourself. The last thing you want to do is be holding it when silver's at 75, okay? And where are you going to, unless you're holding this thing in perpetuity, right? Just get a plan. Because the last thing you want to do is ride your losses down until you reach a point that you can't take it anymore, and then you got to sell. And usually, okay, that's the point that, of course, we reach max selling, and then you do find a bottom. Because we're not that bad right now. Silver's at $75. Don't be worried when silver's at $75 about protecting yourself in this market. Because I don't think we're going back to 121 anytime soon. And I also don't think we're going back to 27 or $13. You know, we were at $22 2 years ago. But you better believe that we could test $47 in a heartbeat, which was the highs of October. And we're at $75 in silver right now. You jump over to platinum. 2041, platinum makes a perfect 1 to 2.618 Fibonacci expansion. And just like that, we rip lower and we just hit 1806 from 2,900. And look at that volume last week on platinum. Platinum off by $28 right now. We jump to yields. So we finally have yields as a hedge with the market. And you got the 10-year right now. Quite the escalation when the markets were trading lower overnight. Right now we're at 4.2%. Okay, 4.2% on the 10-year. You're still up by 2 ticks. But we are well off where we were. And you were as low last night as almost 4.16. Okay, 4.16. Remarkable, right? The 10-year goes from 4.3 to 4.15% in about 48, 72 hours. So yield's going to remain under pressure. You jump over the dollar. 97.68 on that dollar. All right, let's jump over to Amazon. Watch out. Amazon down $20, almost a 9% pullback on Amazon right now. So we're going to trade. We traded all the way down to 196. We're at 202 on Amazon. 202, folks. July of 2024. We back it up further than that. Check it out. Okay, you're talking about prices of 189 in 2021. And you back it up further than that. Pretty remarkable that we're coming back into the strength that you had from the run-up in 2020. And that's where we are. 202 on Amazon, and we pull it up. A story of AI spending. $200 billion in CapEx spending. Now, Google was at $185 billion, as if that wasn't enough. Whew. Collectively, the AI companies are going to spend $700 billion in 2026, man. Net profit for the period, $21.2 billion, in line with expectations. First quarter operating profit coming up between 16.5 and 21.5. How's that for guidance? 16.5 to 21.5. It's $5 billion wide, but guess what? $5 billion wide is not a big deal when you're going to spend $200 billion on CapEx in terms of where you may end up. AWS up 24%. Yeah, Microsoft's growing at 39%. Google, 48%. But if you're a longer-term investor, the race is on. Revenue from the online store business, $82.9 billion over 90 days, up from $75.6 billion. But yeah, they're going to spend $200 billion. And that's worrying the market a bit. You're going to open at $200. And hey, longer term, I like Amazon. Okay, I do. You know, they have a cash business to support all this, right? They have Amazon.com to support the cash business side of expanding AWS, but they are slowing. But Jazzy, he's AWS, right? That's why he's in that role. They're going to spend $200 billion, and they know the race is on. Pretty remarkable where this market is, though, that now you're talking about Amazon is only going to be, look at this. We're at 188 in July of 2021. We're at 177 in September of 2020. For some context, the S&Ps were at half the price they were at that time. And Amazon's only up about 10-20%. All right, folks, markets in the green. We're coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the NASDAQ 100 up by 0.6% right now. S&P's up by 37. And yeah, Amazon under pressure. You jump over to Microsoft shares, up by $7 or $8. Acceleration higher to 401 from 393 last night. We jump over to Nvidia shares, up by $5 to 176 as this market finds a little bit of a bid. Jump over to Google, following their numbers on Wednesday afternoon. Google negative by about $3 this morning to 328. Now, talking about software companies from the Journal, out this morning, last night I should say. So check out these debt markets in software companies. Software companies, yeah, you're trading on about 90 cents on the dollar right now. Okay? 90 cents on the dollar in terms of the debt. Whew. Since mid-January, it's only the start of February, folks. The prices of loans issued by the likes of Cloudera, Click, the maker of intelligence software, are down 10% on the dollar. Whew. Look at this Click term loan. Doing about 4 years. And what they talk about is they're not longer term loans. You're talking about shorter duration, 3 to 5 years, but somebody else has to give these companies money in 5 years. All right, this isn't Apple. This isn't Microsoft debt. It's not Meta debt. And you're talking about a 10% wipeout on these debt instruments in the span of about 2 weeks. Now, talking about private markets. Check out this one, right? So this one is talking about, of course, XAI and SpaceX. Now, these companies became one. They're two private entities. They're not publicly traded. All right. And private companies get a lot more leeway, as they should, right? I've been out here before talking about when it's Elon, whether he's tweeting, remember he was taking Tesla private at 420? Do you remember that tweet? It's probably going back 10 years ago, that tweet now. Time is so crazy. You can do a lot of stuff with a private company. When you go to public markets, it's public, you have equal access to information, all this type, right? But private companies, they get a lot of leeway to do whatever they want, rightfully so. SpaceX, under this valuation, was worth $1 trillion, and XAI is worth $250 billion. Now, the way this came down is that Morgan Stanley provided an estimated valuation of both companies that could be used to structure a merger. Okay? And you have the board of each company deciding their value. SpaceX's board decided as of January 30th, we're worth $1 trillion. XAI's board said we're worth $250 billion. And they said, you know what? And now combined, we're going to be worth $1.5 trillion. Let's call it a day. Gentlemen, good work all around. Now all they got to do is push it out to the public at that valuation, right? That's where the true test comes in. Now, what's remarkable is this rolls, Twitter shareholders, okay? Mr. Ellison, in backing some of that deal, is now going to be a SpaceX holder, okay? This is why people plow into the richest man in the world's ventures, right? Because through some financial engineering, Twitter combines with XAI, and all these investors got to agree to it, so there's nothing nefarious going on. The real test is going to be when they push it out to the public, right? But Twitter, they merge with XAI or whatever he was calling that AI company. That becomes XAI. They then value that at $250 billion. They value SpaceX at $1 trillion. And of course, they're going to combine, whether you're talking about satellites, okay, whether you're talking about SpaceX execs selling the company's new focus on AI satellites, are they going to build data centers in space? All of that. It's going to be the ultimate growth play, and it's all coming down the line in 2 years. This is like, what a playbook, right? You want to be on the forefront. You don't want to be having to prove yourself in the market for Tesla, and they're there, but what a forefront, right? What is going to be the provability of this? It's so far out. You're going to start hearing that space and SpaceX, man, they are a cash hoard, okay? As in government contracts. It's not like XAI in the same degree where they're just plowing money into chips. Now, here's the best part I want to get to in this article. Both companies went for clean round numbers. Morgan Stanley did not provide a fairness opinion on the valuations. That would be a common feature in some merger and acquisition deals to ensure they were reasonable, although it's less common in transactions between private companies. Remember this disclaimer, okay, when they go public, because the valuations they're using are decided upon themselves. Period. End of the sentence. Okay? Now, here's the best part of it. Many are supportive of the new vision. They expect the company to frequently launch orbital data centers on Starship, a rocket still under development. However, some SpaceX investors believe XAI investors gained a larger stake in the combined company, because remember, XAI came in at 1/4 the value of SpaceX. And if you were an early investor in SpaceX, you just got diluted, right? To the tune of almost 20%. Imagine you owned your stake in a $1 trillion company, SpaceX, right? And now there's a $250 billion investment from XAI that you now own that same stake in XAI, and you've traded your SpaceX. And yeah, if prior to this action, and listen, the sum is greater than the parts. That's the argument the boards are making, right? The sum's greater than the parts, otherwise they wouldn't have done it. But prior to that number coming in, anyway, I think I probably would have decided it's the same. If somebody says to you, I'll give you shares of SpaceX valued at $1 trillion, or I'll give you shares of XAI valued at $250 billion. Okay? I'm taking the SpaceX at $1 trillion. Taking it all day long. Nonetheless, that's how you get to $1.5 trillion. That number is going to be touted a lot. Remember the Morgan Stanley valuation that has no fairness opinion? And you talk about the ultimate growth equity, man. You're talking about everything combined into one, right? Space travel, data centers in space, all the above. Tesla shares up by $3 this morning, trading at 400. All right, we check in on Amazon as we come back for the opening bell. Look at this gap out there from May of last year. The bottom side of that gap, 191. Pretty remarkable. You're talking about April lows out here at 160. Amazon going to be under pressure, spending $200 billion on CapEx. Microsoft in the green at 402. All right, folks, stay tuned. Come back for the opening bell. Come right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, markets green across the board, but not Amazon this morning. Down by 8.6% right now. And, you're down by 8.6% right now, but this thing was ripping lower yesterday, prior to those numbers, ripping lower Wednesday, Tuesday, the acceleration as well. Amazon just traded down $40 from where we were on the open on Tuesday, folks. $40. Okay? if you don't think pullbacks are possible in this market, and we all know they are, but I don't think right now where markets are charged up and the type of volatility we're getting, you jump over the VIX right now, we hit 2310 yesterday, we're still above 20. The VIX is still above 20 with the S&Ps up 34 points right now. Okay? Amazon's a great stock. Okay? You're down $45. You're down almost 20% in 72 hours. 20% in 72 hours. And yeah. Not NVIDIA, though. Up by 2.1%. Microsoft shares holding on to gains, up by $3. All right, let's take a look at metals. Quite the night last night. If you're watching those futures at about 7:30 p.m. Eastern Time, silver was pushing $60. You had gold hit 46.67. We're up almost $300 from there. And hey, if this is what we're going to get, a nice little consolidation, okay, between 4,700 and 5,000, that would be great for this market. You came within almost $30 of the highs of October on that initial pullback. We got down to 44.23. 44.23. And you got highs out here from October of 43.98. Exactly $25 away from the October highs. Imagine that. $1,400 in a heartbeat. And we'll see if we can catch a bid on some volume, because we haven't had a day with real buying yet in this market after the sell-off. And I'm not talking about matching the sell-off volume. I'm talking about give me a day that was a nice sign of strength anywhere here. Right? Even back it up to December, we had a day at 283,000 contracts. That two-day bounce was 251 and 239. Not exactly an encouraging bounce after the type of sell-off we have going on today. Right now, we're at 118,000 contracts in gold. Jump over to silver. Same thing on silver. Not exactly a resounding sign of strength. When you're looking at Tuesday, the bounce Wednesday, you rip lower with volume again yesterday, and we're bouncing right now on 68,000 contracts. So it's a rough day for Amazon. It's a rougher day for Stellantis. Man, that transition they had into trying to sell Jeep Cherokees for like 120 grand, and I exaggerate. You talk about disaster, man. They could just not recover right now. Down from $29 2 years ago. You're down 25% today. And yeah, how about a $26 billion charge in the EV reset? But they got a whole reset problem, period, man. $26 billion. Whew. Talk about getting over your skis. Largely reflect the cost of overestimating the pace of the energy transition that distance us from many car buyers' real-world needs, means, and desires. I mean, you could say the same thing about just running the company as wrong as you could. That's like the whole point of a company, right? Knowing your customers, serving their demand. Although, and then you run into somebody like Steve Jobs that would say, I'm going to tell the customer what they want. They tried to do that. And the problem is, Steve Jobs, he was right. I don't know why I'm bringing that analogy into things, but they're just going to not be more wrong. And this is, the Jeep deal of selling those cars so expensive, they got a big problem, period, man. Jeep, Stellantis. They're shifting to hybrids, not surprising. Yeah, how about that, man? And of course, that charge going to impact everything. But man, suspending dividends and issuing convertible bonds worth $5 billion. Almost $8 billion of the charges are expected to involve cash payments to suppliers that needed to be compensated for canceled orders. $8 billion. Maybe they should have given themselves a little bit more leeway in those contracts if they were making such a big gamble. And yeah, I'm not sure you have that leeway, right? But boy, you talk about a risk, man. Entering contracts that you might just want to bail on, and if you bail on them, you owe almost $10 billion. Much higher than expected. I'd be careful of that one, folks, because even when they turn it around, okay, they got a problem. Look at this thing. We jumped to some other car companies. Compare that to Ford. This is a straight rocket ship up as this market pushes higher. Ford up by 0.9%. GM up another 1% to $84 right now. Remarkable. All right, let's check out the banks. Speaking of remarkable accelerations, look at the weekly on some of these banks right now. You know, we got a flight to safety as certain equities have performed very well in the face of a sell-off in technology stocks. The banks. Bank of America up by 1.7. Let's check in on Toyota. We're bringing it. Yeah, look at that thing up by 3.3%. They had with their numbers this morning as well? They might be. Yeah, they had with their numbers. They sure are. How's that for you? Somehow they tweaked 626 earnings per share versus 380. And their CEO stepping down. They got a new CEO. Executive shakeup. Yeah, well, the market likes that. Look at this thing. A lot of strength in those car companies right now. All right, back to the banks. Yeah, look at this. JP Morgan up by 3.3% right now. Goldman up by 3%. My goodness, look at these banks, man. This hasn't updated yet, the heat map. We'll go back to that. I think it takes 10 minutes for that heat map to update. All right, we get some buying on the open, especially in the S&Ps. Look at this pop, man. You know, 130 points off of those lows of last night. We check in on metals. Silver, trading at $76. And boy, oh boy, crypto. Now you're up by 7.3%. We're up $8,000 off of the lows last night. And yeah, 60,000, nice round number. We bring it back to where we were in 2021. And hey, if you're looking for support, you know, set a stop in this market, folks, if you can. That's all I'd encourage you to do. We have highly speculative markets all over the place. Volatility can be a trader's best friend, okay? But set a stop. Have a plan for it, whether you're in crypto, whether you're in metals, whether you're in some of these growth stocks. Unless you're setting it and forgetting it with a type of retirement account attitude, you better pick a stock because this run has been meteoric. And the volatility, even on these bounces, this market is no idea where we should trade on a daily basis. Down 2%, up 1%, metals. Hey, today it's a big green day. S&P's up by 70 points. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We kick it off with a heat map. Check it out. You take Amazon, Google, and Meta out of there, and you got green in everything. Verizon, T-Mobile in the red, and AT&T. What do we got over here? Microchip Technology and First Solar in the red. This is the S&P 500, man. You got green everywhere in this chart. You jump over to the NASDAQ 100. Yeah, Amazon. Whoops. Let's get there. Amazon. But look at the green in these chip stocks, man. Okay? Do you know what the problem is for Amazon? They're spending too much money. You know where they're spending that money? Right up here. NVIDIA, Broadcom, AMD, Intel, ARM, AMAT, Lam, ASML, Clack, Marvel. All right, let's see how Amazon kicks it off. Trading at 202, down 9.1% right now. All right, you talk about AI spend. 650 billion. That's the number. We're probably going to push higher than that in 2026 by the time we get to there at the end of the year. And yeah, Amazon, the biggest haul of that. Amazon's at 200 billion. Now, Alphabet's at 180 here in this, okay? But Alphabet has said their range is 175 to 185. So you can see how even this number, it's going to go up from here. Meta's at 125. Zuckerberg does not like getting outclassed like this. He's the ultimate growth guy. Now, that's a lot of money from Meta. But take that to heart. And then you got Microsoft in fourth place. Are you kidding me? Right? If anything, you may just see this continue to accelerate. Why is Microsoft sending 105 billion if Amazon's at 200 billion? Now, Microsoft doesn't have to spend that money if they're growing at almost 48% on their cloud, which they are. But boy, these are some numbers, man. You're going to have to bring in the revenue, and Amazon hasn't shown how that revenue is really materializing just yet. Not as well as maybe Meta and the likes, and Google as well. But yeah, 650 billion, man. Meta's jumping 87%, Microsoft 66% capex. I mean, can you imagine if the trajectory continues like this? I don't think it's going to, but why would it not? This is the ultimate race for technology supremacy. It's like the race forward for nuclear weapons. You know, you win the AI race and you dominate everything early on. You get all the money, you get all the spending, and you can maintain that lead, period. You control everything. And that's what these tech, and boy, you know, every time you see that, right? Look at this, NVIDIA, exactly. Like, give me some more NVIDIA, man. If you're in some of these technology tech stock ETFs, folks, you have a lot of risk, okay? But you're also in the economy, right? You look at something like the NASDAQ 100, you got a lot of risk. But you're also the future of the economy. Versus, okay, some of the risks getting taken right now. The ultimate one, of course, being crypto and not even Bitcoin, okay? The decimation yesterday in coins like Solana. As you're barely back to the close yesterday, you're up $20 off the lows. Ripple got destroyed, down to 112 from 147. Who was left holding the bag at $3 where you traded from July until October? So be aware of those risks, and even in metal, some of the run-ups in metal. You know, folks, you don't even necessarily have to plan for it to happen, but have a plan when you have outlier risks that occur. Because my biggest fear in this market right now is nobody thinks it's at all possible for equities to pull back anything like we've ever seen in the past. And just take that at face value, right? And we can be in a different environment. We can be in an inflationary environment. We're not going back to 2020 prices, okay? But it's been a generational run, man, and we have not had any pullbacks in this market. And, you know, even at silver at $75, people feel like they've lost a lot of money when it was at 121. But you got to recalibrate your brain, folks, and realize that silver's never traded above $50 outside of the last 60 to 75 days. Okay? So we can be at a record price and silver can still drop 35% from where we're trading at right now. And maybe that's just before the next leg higher. Okay? But those are the type of risks you're taking trading the volatility that you're in silver right now. Gold, less so. Okay? I think we might have another test coming back of this October high at some point. We really haven't got the sign of strength that you're looking for in gold. Okay, and we're only 12 hours removed, folks. 12 hours removed from silver at $66. So protect yourself in this market. Pick a stop, get a plan. I say it every day, and we trade higher. And I say, man, they're going to think I'm screaming to hell and high water, right? And then at 7 o'clock last night, I'm watching silver, you know, go down to $63.90, right? And meanwhile, it was at $90 24 hours before that. 90 to 60, folks. We're 12 hours removed from a $30 decline, which is only 24 hours removed from a $50 decline. It's just not behaving rationally. So if you're not watching that market 24 hours a day, there's a chance you wake up tomorrow, and just like it was at $63.90 yesterday, you know, protect yourself. And hey, we got volatility. So yeah, I get it. You know, trade the heck out of this market, but make sure you protect yourself to be around this year, because we're going to have a heck of a year as well. You're seeing the type of reaction we can have in yields, okay? Yields are under pressure. The Fed is already set to cut, much more likely than they were 72 hours ago. And we got dollar weakness back to 97.57. And that's all going to be wind at metal's back. XAU just completed a very simple one-to-one. And yeah, you look at a chart like this, okay? And as, you know, technical traders, it's a remarkable run. And I'm not talking about from $38 in 2015, not $72 in 2018, not even $90 in 2022. I'm just talking about the last 24 months from 105 to 400, from 458. And then you could say, really, the run from 139 to 458 over 24 months. Copper may be behaving the best, okay, of all the equities. Look at that acceleration you got on a daily basis. The volume pullback, not as much. I like the way copper's trading right now. 658, we take a look at some of the copper stocks. Freeport, $60, up 1.4% today, and Southern Copper, probably the strongest. Look at this, right? Looks a lot stronger than some of those gold equities. Southern Copper up by 3.5%. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the bulls in charge today so far. S&Ps, we are up 76 points, up 1.2% right now. You get the 10-year yield at 4.21. We jump over to yields. It is risk on. They're buying equities. They're selling fixed income to buy those equities. Reverse of what we had happen yesterday. It's actually good to see this type of relationship occurring, though. Okay, that market was dislocated a bit. We had the market selling off. We had the 10-year selling off in price, right? Not the case right now. Okay, equities trading higher. We have yields rising a bit, 4.21%. You jump over the dollar. No bid whatsoever, 97.57. Dollar weakness right now. We check in on Amazon. Yeah, right where we opened. Amazon down 9%. They're going to be spending money on NVIDIA chips. NVIDIA's up 5.2%. These chip stocks. AMD up by 7%. Micron up by 2%. ASML, oh man, up by 3.2%. And Broadcom will jump too. Yeah, up by 5%. Jump to metals, gold up by $70, $49.59. And silver, technically negative on the session. Oh, but $12 off the lows at $75.45. So you jump back to the S&Ps, we're looking for volume. It is quite a bounce. We'll see if we get some volume because we've had some volume on the downside, folks. It has been quite a week. Yeah, the second was Monday. You had Friday, Tuesday, things really got accelerating. Look at the volume. Now, we're only 26 minutes into the trading day, and we got some price action. We'll see if we get the volume. The last couple of days, we've been doing 2 million contracts on a daily basis. It's going to be a big week of volume. We're already at 8 million NASDAQ 100. We finish up the program with the volume on the NASDAQ 100. Same deal. Look for that volume. 762,000 contracts yesterday. All right, folks, stay tuned. Unfortunately, Basil Chapman, he's all right, but he's a little under the weather today. So he is not going to be doing his program live. And Steve Rhodes might be have something he's taking care of as well. So we get some replays, folks. I'm coming up live. Larry live at 1. We'll see you this afternoon, folks. Have a great Friday.